Hey, what's going on, guys? This is Blood Phantom here, and today I want to talk about why I think investing in the stock market is a lot easier than people make it out to be. And so this is just based on hearing other YouTubers and so-called financial experts talk about the stock market in general, and you'll hear very advanced terms such as balance sheets and income statements and earnings reports, all that type of stuff. And I think understanding that is pretty unnecessary if your goal is to make money in the stock market. Maybe you're a new investor and you understand that investing is a lot better than saving in terms of making your money grow in the long term. Whatever your goal is, I think there's a huge disconnect between what people think makes stocks move and what actually makes stocks move. And I'll probably leave that for a separate video entirely. But for the most part, if your goal is to make money, I think investing is very, very simple. And so I'm going to give some tips on how to make the most of that. So I don't know the level of which, I don't know the level of education of people watching this video, but I'll go ahead and start very slowly. So the stock market has things called indexes, which are very large collections of companies, and they can be used to gauge how the stock market is doing. And so you may have heard the Dow Jones Industrial Average, for example. And so what it is an average of several companies across different sectors. And so what these indexes are used for is basically a way to measure how the stock market has done on that particular day or week or month or whatever. So if the stock market went up 1.39%, that's usually what people mean. So it's usually like a good day for stocks. If this is down like 3%, that's usually like a very, very terrible day for stocks and that kind of thing. So because they consist of very large companies, those are usually very reliable and sort of household name type companies. So what I have here is a list of companies in the S&P 500. And so this is sorted by the portfolio weight. So like the way to read this is Apple represents 4.11% of the S&P 500. And so yeah, if your goal is to make money, as I said, what I would do as a new investor, this is me 6 years ago, would be to just invest in large companies with a history of price growth. So why don't we take a look at Apple? Apple is here. So we take a look at how Apple has done in the past year. So the overall stock market hasn't been doing too great in the past few months. But we take a look at Apple in the past year or the past 5 years, and look how much Apple has been killing it. If you put your money in this thing, chances are it'll be worth more next year. And that's a lot. That's like, I can't guarantee that, but that's like, if I had to put my money on something that was reliable or as sure as can be, these are the type of companies that I would invest my money in. And so the really awesome thing about Apple is it made an all-time high on Friday, despite the market not doing too great yet. And in my opinion, this makes me feel like we're not going to be in a recession soon, despite what a lot of people think. The fact that the market leader, Apple, has made a new all-time high is a really good sign. And that's another point I want to talk about, is another reason why understanding the financials of these companies is not important, is because people are going to invest in these companies regardless. So there's a lot of people and funds in general, multi-million-dollar funds that are investing in these sorts of groups of companies all at once. So whether that's, your dad who invests in the 401k, or your mom investing in a mutual fund or something like that, or any kind of retirement plan or something like that, when people talk about passive investing, what they're talking about is investing in all these companies all at once. And so these companies are going to get money, and they're going to get their shares bought regardless of how they're doing under the hood, so to speak. Let's take a look at another one of these companies, like Boeing. I know Boeing's been killing it lately. Yeah, look at that. Look how beautiful that 1 year chart is. If I invest in Boeing today, will it be worth more next year? I truly think so. Like I said, I can't guarantee that, but if we're talking about investing and the best way to invest, understanding all these complicated terms, especially as a new investor, is not necessary, and it will not make you a better investor. And I'm speaking about this. I'm talking about this from a standpoint of I've already been there. I used to read all news I could about a company, thinking that it would make me a better investor, thinking that I would get some kind of edge on this company, something that most people didn't already know because I was the one that was dedicated and putting all these hours into understanding these companies. It didn't do anything for me. And the reason for that is because I don't think fundamental analysis is very valuable when in the business of making money. And that's mostly because they're not always synced together, you know? You could have a very good earnings report. So like Robinhood has these like earnings reports charts. You could have a very good or bad earnings report, and the stock market will behave the way it wants to. It might go up after a bad earnings report, and it might go down after a good earnings report. It all depends on sentiment, which is what I think makes the stock market move. So yeah, before this video gets too long, I just want to say the main takeaway here is don't worry if you don't understand the language that people speak, because number one, actually the main takeaway is it's not necessary, and there's not much of a correlation between that and what makes stocks move up or down. So that's it for this video. If you enjoyed it, please like and subscribe and all that stuff. If you have any questions, feel free to like and comment. Yeah, I hope you have a great day.